Hi, just entered a trade in the last couple of minutes here on the ES, which is the E-mini futures contract on a 3-minute chart, trading the indicator coupled with the vertical bar trading pattern. Um, I have entered the trade at 9:12:25, 19:12:25 rather, and my stop at the minute is 19:25. My stop's probably a little bit away, probably closer at the present minute to it should just be above 1920, probably down around here. I'm giving it a little more wiggle room because I can within my risk parameters. And the reason I have my stop up there was because the last green bar there, you can see that there is where the previous support was. Once it broke through it, that then becomes resistance. Um, but we can see that we went into red mode after the buy signals come up here. Earlier on, we had quite a nice buy signal. The buy signal was here in this market, which was stopped just underneath there. And again, there was a lovely, let me see, there was probably a 20 point, 25 point trade on the S&P from that point. It was a good trade. Very volatile day. This is the day of Monday, the 24th of August, whereas the markets have been very, very, very volatile. Indeed, the Dow Jones opened today, or just slightly after the open, rather, it was down 1,000 points. So again, our trade's not looking too healthy as we speak. It is minus $262.50. But again, it hasn't negated our sell signal. So we'll just have to see whether it's going to be successful or unsuccessful. I really don't want it to break really above 1920, because if it does, that would have broken up through the previous high here, although it wasn't just quite a confirmed high. I've been a little bit aggressive in my signal, but it certainly is a trade that I think today is one of those days that you need to be a little bit more aggressive with your signals, providing it's within your risk boundaries. So my stop's at 1924.25. I don't want to see it trading above 1920. If it does, it'll make me probably just close the trade. Remember, if you can take small losses, um, your profits will certainly run. There's no doubt about that. Your profits will definitely run if you can take small losses. I'd far rather come out of the trade and re-enter if I could see a bearish bar up around the 1924.25, if that's what it's going to do here. Perhaps we'll just pause the video here because obviously time is going by and we don't want to have a big long video where nothing is happening. So I'll just pause it. I'll come back to it. Remember where my stop is 1924.25. I will come back to it and we will see in a few minutes whether this trade is going to be successful or not. Another few minutes have passed now and you can see that we're down now to near our entry level. So we're down just over a point here at this minute in time. So we have the 1920, which is a key level in relation to this particular trade. If it had been taken out to the upside, as I've already said, it would have left me in a position of wanting to probably come out of my short trade. And if I had to re-enter at a higher level, I would. We're now down near the entry here. It's if it shows much, if it goes down below our previous lows, then that's lower highs, lower lows. It's quite probable the market could take quite a move to the downside in the last hour or so of trading. Again, I'm not here to predict. I'm just here to trade what I see, and that's all. That's what I encourage of all of the time. I'll just put this in pause a sec. What I am going to do now, just to let you know, remember price action just tell you a story, and I'm sure it's very plain for you to see that there's like a double top up here at 19.1950. So although my stop was initially at 19.24.25, I am bringing my stop down to 19.20 25, which is just above the two little peaks that we've had, and it's a very good entry, because if a very good strategic place to put your stop, because I have to accept that if the market goes back up and goes up through that, then this short signal, the sellers are certainly struggling to get it down, and the buyers are fighting again. And again, I would not want to be in a short trade at this particular time. At this minute in time, it appears to be moving for us, and I would like to see it coming down and breaking below this 1905 level. If it breaks below that 1905 level, then yes, we've got a good probability of certainly getting our trade down to a break-even trade, which is key, because then we're in total risk-free mode, and we're in relaxation mode, and it's only a matter of then managing the trade. But again, you can't bring your stop down to break-even trade too soon, because it still is quite possible that the market could wiggle about around those levels and stop you out, only for it then to go down. So you have to have your stop at all times in a strategic place. But certainly if the market started moving for you to some extent, it is very wise and very prudent, as our old ex-chancellor and ex-prime minister in the UK used to say, Gordon Brown, prudent. Let's be prudent, and try and just be careful with our protecting our money. And if we can be careful with protecting our money, then making money will come. It will come if we can protect our money. The making money side of things will come. Just pause this again. You see we're up 225 to 37. Our stop's now at 19.20.25, and our trade entry is 19.12.25, and it's at 19.07.25, 19.07.50. So we'll just watch this intently, and let's see, does it follow down to give us a real good trade. Just a quick update. You can see we're now at a key level. It went to 19.05.25, but the previous low was 19.05. It maybe is breaking down through it now, but always be aware when you're trading of where a previous bottom was or a previous high was, because obviously that becomes double tops and double bottoms, and you want to see this breaking down below that with a little bit of vengeance, to be quite honest with you, to clear that, because quite often based on old GAN trade, but it's part of price action, the market can break through a previous support or previous resistance and then reverse first round, and in this instance it would be breaking down through this previous support at 19.05 and then retracing and giving a bullish bar, and quite often that can be a very strong buy signal. But admittedly, you need to have probably a little bit more bars in between that happening than this particular instance, because there has only been 1, 2, 3, 4, 5, 6, 7, 8 or 9 bars. Ideally, the more bars between the previous support or the previous resistance to the next one can be more significant. Now, the trade's starting to move for us now, so it is. We're up $500 at this minute in time, and we will just let it play out and see what happens. It's just a little bit early yet to bring our stop much lower, but again, at this stage, being up $500, I certainly, although there's not a strategic place yet from where to place your stop, I would definitely not be letting my trade now go into a losing trade in this particular futures market, which is the E-mini. And in fact, to prove that, I'm just going to bring my stop down now to my entry level, and that is where my stop is. I would really like the market to move a little bit lower, and then I can bring it down to a more strategic place, which should be in around 1908. And the reason I say that is because, remember, this 1905 figure here, will I just put my mouse on? This entry here, this level here, is the previous support, and once it breaks through that, then that there becomes the resistance. But again, to give it, don't just put your stop ever at the resistance, always give it a little bit of wiggle room. I talk about, so in other words, give it a little bit of room that it can move up through the support and give it room to turn down again. And that there is pretty key there, to be quite honest with you. So if this market is, remember, if a market's going to go down or if it's going to go up, it should, if it is going to retrace, which more than often it does, because that's what our vertical bar trading pattern is based on, it should only retrace to the previous resistance or the previous support, which is then resistance, because that's a sign of weakness. If it doesn't, it goes on up through that, quite often then there's not enough pressure in the market to move it lower. So always remember that on any financial instrument, if a market is making lower highs and lower lows, and it goes back up to previous vertical bar confirmed low as this was, and it doesn't reverse just above that low or around the low of that low, then, and it breaks up through it by quite an amount, then it's quite probable that the selling pressure in this instance would not be overpowering, excuse me, the buyers just yet. So at this stage, everything seems to be okay. The market seems to be going a little bit lower. Again, remember when you're coming up to the 00 figures like 1900, 1850, 1800 in the S&Ps, or in 10-point increments even, that can also offer support because it is a mental support. But again, we're not trading mental supports, we're trading what the markets are telling us, what this particular market is telling us. It's showing weakness in the market, and let us make sure that we avail of that. Now, the market's moved on down to 1900, certainly $500, $600 of open profit. For me to get nothing out of this trade would not be very, very wise either. So I am now bringing my trade down. I've done it at 1912, so I'm going to bring it down to 19, at least 10.25. So I'm going to 1910 even. I am now going to lock in at least 2 points of profit, which is not much, but at least it's 2 points of profit, and I will bring it down. Ideally now 1908 is the level that I would like to. 1905 if this goes lower, but I just want to give it enough room for the market to actually go a little bit lower. And again, we're up $750, $762, and my stop is now coming down to just above the 1905. In fact, I'm going to bring it to 1906.75. That's just above the previous support. The market's going lower. We're up $800, $825. I certainly want to see this going lower, and therefore I can bring my stop down. But I'll try and bring it down strategically. I don't want to bring it down in midair, because when you bring it down in midair, the chances of being taken out in midair are very great. But certainly with $700 or $800 of open profit, and we're only trading one contract. Now, trading two contracts leaves it a little bit easier because you can lock your profits in one, and you can use the second contract to be a runner. Again, if you're trading three contracts, you can lock in profits of two, or again, lock in profits of one and use the other two contracts to be a runner. And what you do, you bring them up to a break-even trade, and if the trade goes away on down, you're going to really maximize that, let your profits run. And if it doesn't go down, then you've already locked in the profit in the one contract, and you've brought your second contract up to a break even. Again, if anybody wants to talk to me about that, it is that's just send a little email. But remember, it is a very, very efficient way to trade. It's very hard to trade if you're only trading at one contract, or again, if you're trading with the spread betting indexes, if you're trading at £1 a point, it's harder than if you're trading at 2 or 3, because you can break your pounds per point down to the same scenario as if you were trading on a one contract basis. Up $975 of open equity, certainly bringing my stop down a little bit lower at 1905.50, which is where the last little peak high was here. So we'll see what happens. The market can quickly reverse. Remember, we're in a very volatile day. That's given us 7 points. So I'm going to lock in roughly $325 or $350 guaranteed profit if it doesn't go any lower, if it retraces. But everything looks good. Let's see what's happening. Remember where my stop is, 1905.50. 1912.25 was my entry, and let's see what happens. Pause it for a second and come back. Now the trade has moved on down lower first. We're now into 1200, 1220. So what I'm going to now do, I'm bringing my stop up. You see it's at 1905.50. You've heard me talking about earlier just in this video about the round numbers being the key point. So I'm not just going to bring it down to 1900, but I'll bring it just above 1900. Now that would still be giving quite, that'll be giving, there's 1900.5. That would still be giving quite away. We'll be giving 12 or 13 points away at this stage. And if I did see it retracing on a downward move like this, you always would, it's very hard to get a strategic place because there's no retracements as we speak, and if it does retrace, it could actually retrace pretty quickly with a vengeance due to the volatility of the market. So what I'm inclined to do in a trading market such as this, and those of you that know the E-minis are very volatile, I would probably be bringing my, I wouldn't like to see it breaking up through this particular bars high here, and let me just tell you where that is. But again, I'm not just going to move my stop and bring my crosshair. So there really is 1895, 1896. I don't want to see it going above 1896, to be quite honest with you. It would maybe mean that I would bring my stop down lower, so it would. So as we speak, the market, it's doing okay for us. It's working well here, $1,425, $1,400. With a guaranteed now at 12 points, almost 12 points. In fact, we'll just make it 12 points to bring this down one. We've got guaranteed 12 points locked in, so 12 fives, so $600 locked in, guaranteed. But obviously, with it being up $1,500, it leaves it quite hard. One contract, it's a lot easier when you're handling two, because now what you do, you've locked in your one contract profit, and you're letting the second one run. And at this stage, even your second contract's guaranteed in profit. So it's certainly very, very good. And again, I can see now the market in this last bar here come up to this high here. And let me just put this cursor here. That there was at 1894.50. The previous high was at 1895. 1895, 1896. So I'm going to move my stop at this stage now down to this level here of 1896.50, which is just above. So I hope you can all see the reason that I'm doing that. The market hasn't given me an opportunity to retrace, and I want to lock in my profits. Again, we haven't been in the trade. Each bar represents 3 minutes, and let me just see how many minutes we're in this trade. We're in it 1, 2, 3, 4, 5. Let me see. We're in it 1, 2, 3. I'll just count this properly. I apologize for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we're in at 30, just over 30 minutes at this minute in time, and we're up $1,500 with a guaranteed profit of now of, what have we got? $1,100 locked in. Maybe more, to be quite honest with you. What is it? 1912.25. 1912.25 and 1896.50, yeah. Yeah, 15 points, yeah. We're locking in $787, so it's not bad going. If we could make it, if we could all make it every 30 or 40 minutes, it'd be very nice. Obviously, making $1,500. If we thought that the market was going to bounce and stop us out, you'd definitely come out. But what you're trying to do, you're trying to read the market. You're trying to let your profits run, and it's trading times such as what we're in that gives us the opportunity to be able to do this. So we're up $1,500. Our stop's at 1896. We'll pause the video for another little period, and again, it's 20:03. We'll come back to it very soon. And just on that, I'm just going to bring my stop just down a little bit to the previous high here, which is 1895.25. And that's given it 6 or 7 points of wiggle room now. Because the markets are so volatile, it may come up to those levels. But again, I don't want to see it taking the highs out of the previous couple of bars and giving back too much profit, considering that we had about £1,500 or $1,500 rather of open equity. So at least we're going to have 800 or 900 if it does stop us out. Let's just see what happens. It's at 1891, 1892, 1892.50, 25. We're back to $1,000. I'll just pause it for another second, see what happens here. And if it retraces from these levels and goes on down, this could certainly break this particular low down here. If it does that, and I would say we'll be into quite a lot of, if it breaks 1877 or 1877.50, we're going to be in business, to be quite honest. You could work into a real good trade before the close of trading. At this minute in time, it is going quite nicely, and you can see, you know, it hasn't, as we speak, broke up through that particular high. If it does, you know, let's get out of it. It may be a little premature due to the fact that we haven't got a true vertical bar, a lower vertical bar trading pattern high from where to put our stop, because that would still be a way up, would you believe, at 1920, and then we brought it down to these levels here because it was the previous support, which becomes resistance at 1905, and then we brought it down further. So again, look, it looks that we could be getting ready to be stopped out here for an 800 or 900 or whatever the case may be. Let's see what we've got. Just you can see it's moving about quite a bit here, so there's a little bit of a fight going on. Let's just see if we're going to get stopped out or not. I don't like let the video run too long, because obviously when there's not much happening, it gets boring, and we don't want that. The object of me putting this video up and doing a live trade is it makes so much more sense, and gives you the understanding of, first of all, why we entered the trade, and secondly, how we follow the trade on down and lock in as much of our profit as possible. Yeah, we're not far away now from our stop level. And again, it could be coming up to make a lower vertical bar trading pattern high. But again, we're in the trade now for getting on 35-40 minutes. And if we are stopped out, we're stopped out. We just have to accept that. Sometimes it's very hard to get into a trade again because we don't want to be chasing the trade. We're really more or less about to
order filled.
We're filled. So we got a beautiful trade there of some $887.50 in just about 40 minutes trading. I hope you enjoyed watching. Thank you.